Right now, it feels almost impossible to invest with any confidence. Interest rates are stuck at their highest level in over a decade. There's a war in the Middle East pushing energy prices around. Artificial intelligence is either the biggest opportunity of our lifetime or the biggest bubble, depending on who you ask. And every day, the market swings hard in both directions. So the natural instinct is to freeze, to wait until things calm down. But here's what I've learned, and what the data backs up. Waiting for the market to feel safe is one of the most expensive mistakes you can make, because it never actually feels safe. Today, I'll show you how to invest through the chaos, without pretending I can predict what happens next. Let's start with the thing everyone's anxious about: interest rates. Right now, the central bank is holding rates high to fight inflation, and there's real uncertainty about whether the next move is a hike or a cut. Here's what actually matters for you as an investor. Higher rates make borrowing more expensive, which pressures company profits and especially hurts fast-growing tech and property stocks because their future earnings are worth less when rates are high. That's why the market gets jittery every time there's a rate decision. But here's the part people miss. Nobody can reliably predict what the central bank will do, including professional investors who do this full-time. If the experts managing billions can't consistently time it, you trying to time your investments around rate decisions is a losing game. The move isn't to guess. The move is to keep investing steadily regardless, so you're buying through both the fear and the recovery. Now the scary one, the conflict in the Middle East. War is genuinely frightening, both as a human tragedy and as a market event. It pushes oil prices up, feeds inflation, and creates exactly the kind of uncertainty markets hate. So, should you pull your money out until it's over? History gives us a clear answer, and it surprises most people. Markets have lived through wars, oil shocks, financial crises, and pandemics, and over the long run, they have recovered from every single one. The investors who panicked and sold during those crises locked in their losses. The ones who stayed invested, or kept buying, recovered, and then grew. This is not me being dismissive about a serious conflict. It's me being honest about what fear does to your financial decisions. Geopolitical shocks feel like the end of the world in the moment, and historically, they have been temporary dips on a long upward line. Reacting emotionally to headlines is how ordinary investors destroy their own returns. Then there's artificial intelligence, which is its own kind of chaos. Half the market thinks AI will transform the economy and justify every high valuation. The other half thinks it's a bubble that's about to pop, just like the internet stocks did decades ago. And honestly, they might both be right. When the internet bubble burst, a lot of overhyped companies collapsed completely. But the internet itself absolutely did change the world, and the companies that survived became some of the most valuable in history. AI could follow the same path, a painful correction for the hype, alongside a genuine long-term transformation. So what do you do with that? You don't bet your entire future on a handful of hot AI stocks, because you can't know which ones survive. But you also don't hide from the technology entirely. The answer, as it so often is, sits in the boring middle. And that boring middle is the actual strategy. So let me make it concrete. The single most reliable way to invest through chaos is broad diversification through low-cost index funds. Instead of trying to pick the winning stock, the winning sector, or the winning moment, you own a small slice of the entire market. When you buy a broad index fund, you automatically own the AI winners, the energy companies benefiting from higher oil, and the stable businesses that hold up when everything else wobbles. You don't have to predict which one wins, because you own all of them. This is how you turn chaos from a threat into something you simply ride through. The second piece is a technique that removes the pressure of timing entirely. It's called investing a fixed amount on a fixed schedule, no matter what the market is doing. Same amount, every month, automatically. When prices are high, your fixed amount buys a little less. When prices crash, that same amount buys more, so you're automatically buying the dips that terrify everyone else. Over time, this smooths out the wild swings and takes the emotion completely out of your hands. You stop trying to guess the perfect entry point because you're entering at every point. In a chaotic market, this is close to a superpower because your biggest enemy isn't the market, it's your own urge to react. The third piece is making sure you never become a forced seller. This is where everything connects. Keep an emergency fund of several months of expenses in cash, completely separate from your investments. Why does this matter so much right now? Because in a chaotic market, the worst thing that can happen is being forced to sell your investments at the bottom to cover an emergency. If you lose your job during a downturn and have no cash cushion, you're forced to sell low, turning a temporary paper loss into a permanent real one. The emergency fund is what lets you leave your investments alone through the storm. It's not the exciting part of investing, but it's the part that lets everything else survive. Let me be completely honest with you about the risk, because you deserve that. Everything I've described can still go down in the short term. Diversified index funds fall during crashes. There will be months, maybe years, where your account is worth less than what you put in, and it will feel terrible. I can't promise you smooth returns, and anyone who does is lying. What history strongly suggests, though, is that a diversified, low-cost portfolio, held through the chaos and fed consistently over many years, has rewarded patient investors far more than cash sitting on the sidelines, waiting for a calm that never quite arrives. The volatility is the price of admission. The long-term growth is what you're buying with it. Never invest money you'll need in the next few years, and understand that this whole approach is a long game. So here's the bottom line on investing through chaos. You will never get a clear, calm, obviously safe moment to start. Rates, wars, bubbles, elections, crises, there is always something. The winning move isn't to predict the chaos or to wait it out. It's to build a system that works regardless. Diversify broadly, invest a fixed amount on a schedule, keep a cash cushion so you're never forced to sell, and then let time do the rest. Chaos is not the exception in investing. It's the permanent condition. The people who build real wealth are simply the ones who kept going through it. Now tell me honestly in the comments, what's the one thing making you most nervous about investing right now? The rates, the war, the AI question, or something else entirely? I read every comment, and I'll pin the most thoughtful one.